Guess what? It all nets out to a pretty flat performance by the indexes. So what we've had is really good economic and corporate news colliding with a market that has already built in a lot of expectations for good things, for boom times. You have investors with relatively full allocations, I think, to the market. You look at a lot of indicators in terms of retail and institutional portfolio levels. All that's to the good. I don't think that this week was necessarily decisive or worrisome in any way, but it does keep you in that same mode of saying we're weighing all the good that's happening right now with the concerns that we might be seeing peak growth rates and then the challenges down the road, whether it be from somewhat higher yields or inflation getting disorderly to the upside, or, who knows if the Fed's going to have to start talking about easing back on easy policy before too long.
Liz, clearly fantastic data, fantastic earnings, but can it continue at that pace for the rest of this year?
Yeah, I think first of all, when we look at the pullback today, we can't hit new highs every day. So anytime we're heading into something where the market is really racing to the top, we're likely to have little days like this. It's a friendly environment for the market right now. Not only do we have a Fed that's been abundantly clear that they're not going to move, we've got 10-year yields that have relaxed since the end of March, and we've got a ton of economic data that's going to continue to be strong throughout the summer. So it's a friendly environment there. On the other hand, we have valuations that are challenging. We have 95% of the S&P trading above a 200-day moving average. So some of the technicals, some of the fundamentals are looking a little bit frothy. Typically, when that happens, you're going to see some mixed results in the market for the next maybe 90 days, so 3 to 4 months. But over a 12-month period, you still can see strong results and strong returns. So I do think the momentum can continue if we're looking out a little bit further than 90 days.
Barbara, what do you think the small caps are signaling right now? I asked that as the Russell 2000 just finished the day down 1.5%. It was lower on the week. And just in general, for the month of April, it has underperformed. I mean, this was the basket of stocks that was kind of seen as a reopening gauge. Now, with tax changes in the mix, discussion or debate around inflation, I mean, is this what's dinging these names?
I think a lot of it is that. And, the small cap typically perform well in the early stages, of a recovery. And we are well into this recovery. So I think small cap has probably seen its day. I don't think we're going to see another big run. And you could say it is also a victim of the rotation. But, if we start to see, heavier tax burden, that's much harder on these companies. They don't have the balance sheets. They don't have the leverage that they can use, they can resort to. So we'll see. I mean, taxes is not yet a big issue in this market. You haven't seen there be a tax fight yet. And frankly, I'm not sure there will be, because I'm not sure that Biden's harshest proposals will get through Congress, being that Congress is a majority millionaires on both sides.
So, Mike, a lot of the FANG plus Microsoft type names pulling back today, but interesting to see Tesla bounce quite significantly after a soft week, and also Bitcoin bounce as well significantly today.
Yeah, there's been these efforts to, kind of get the party restarted in some of those areas. On Fridays, it seems like there's this huge flow of people just buying call options in Tesla. Let's see if we can get this thing working. And yeah, it has also, felt its pain. I would also just add to follow on Morgan's question, I think small caps to some degree got to those heights because of tons of retail investor kind of aggressive flows in that direction. And if you look at some of the other tells in that area, whether it be the hyper growth tech stocks, the ARC names and things like solar, they've all had pretty serious pullbacks. So, the Russell was to some degree riding along with those trends, in addition to being also a cyclical indicator.
Shepard Smith here. Thanks for watching CNBC on YouTube.